Direct my first question to my fellow Kansan, Mr. Reed, and to Mr. Smith as well, and if anyone else should care to comment, please do. There's no question that recent events in the auto industry, including Chrysler's bankruptcy filing and GM's announcement there will be shutdowns at plants this summer, could have huge impacts on small manufacturers and parts suppliers that will lack the cash flow to maintain operations. These problems are exacerbated by the fact that the freeze in the capital markets has been crippling for many small manufacturers. Could you tell me what problems you are facing with regard to receiving loans or lines of credit from banks, what you think are the most effective way to ensure that viable small manufacturers and parts suppliers have access to the capital they need to maintain operations while the auto industry restructures and the economy recovers? Should we be looking at expansion of the automotive supplier support program, a direct loan program administered through the SBA, or a reconfiguration of 7A loan guarantee requirements to ensure that small manufacturers can participate even if they're dealing with cash flow problems? Any comments on your situation, sir?
Yes, sir, Mr. Moore. I think I mentioned some of those in my opening statement, but personally, in my situation, in fact, in Kansas, just to give you an idea, I asked 3 local banks. There were 330 banks in Kansas that were offered the TARP. 4 of them took the TARP. And the reason my local bank and anybody in Manhattan did not do that was 9% cost of money that was put on that, and the bureaucracy and the regulations that were further put on the banking. They did not want to pursue it. Now, my personal situation was such that I, at the current point, don't need the working capital there. I do need it in Arizona, but I don't need it in the Kansas at this point. But the problem we're facing is the banks, theoretically, the ones that haven't taken, they're not necessarily changing the level of quality or qualification to get the loan, but they're not lowering it either. So they normally look at, say, what's your cash flow? As what somebody said, cash flow, cash flow, cash flow. If the receivables are down because we don't have the business base anymore and the cash flow is down, we need to have the working capital, which I mentioned earlier.
Sure.
The SBA does not do it under the current situation. That will not help us. But if we expanded it to a suggestion that I made earlier, something like that, that would be very helpful. As far as the other activities, I think we're looking at, I said, 90 days to 6 months. If we don't do something, an awful lot of these people are not going to make it. And again, nobody wants a handout, but at this point, we have to have some way to keep the operation going, to keep the payroll going, and keep those people employed. Because when it does turn, and it will turn, you're going to lose other qualified people, and that's more difficult to get started than before. So I think that addresses at least one of those, Mr. Moore.
Thank you, Mr. Reed. Mr. Smith, do you have any comments, sir?
Yes, in terms of the large Tier 1s, and that's a lot of our issue, is the health of the large Tier 1s. We need to make sure that they are healthy and they get through this crisis. The MEMA originally, when the programs were put in place in the $5 million carve-out, if you will, for the supplier early pay and receivables assurance program, estimated that $14 billion was needed, not $5. And also the timing of just getting these things done has been very cumbersome. For instance, a lot of the weight, if you will, is doing lien searches on all of your receivables. So by the time, with limited resources, lien searches are done, the OEs are acting as quickly as they possibly can, but quite frankly, their hands are tied somewhat by city and also the Treasury Department in terms of getting these things through. We need to have a quicker response. We need to have the Tier 1s healthy so that the tooling industry gets paid. Everyone is paid. And we also need to have a program in place to help us, again, when things turn back up, that we've got the cash to be able to fund these things. In terms of the smaller companies, absolutely, the SBA needs to be redone. $2 million is not enough. At a minimum, it should be $5 million. And it needs to be able to be done quickly. And some of the requirements and the T's and C's that go along with that need to be really smoothed out. I mean, we appreciate the fact that the fees were waived for the automotive crisis, but it's not the fees, it's the timing, the amount, and some of the other requirements.
Madam Chair, my time's about up. I yield back the balance of my time. Thank you.